Hello everyone, Jesse Webb, Traders Pro. Market conditions mildly bullish. Still, after that big run the last couple of days, I thought we might have ticked back up to bullish, but that may happen here in the next couple of days. We'll certainly be watching that. The power of this rally off of this support definitely looks like there could be some more legs to this rally, testing the upper ranges of S&P 500 and really all of the market indices over this last 3 or 4 months. We'll take a look at some of those charts here. Momentum, we're in this ranging zone and just about to approach that upper trending limit, that upper trending location. Breadth and sentiment also still looking pretty bullish at these levels. Sentiment is starting to climb back up a little bit here off of these lows. That's typically what we see during a bullish trend, is you start to see the sentiment start to move back to bullish. And we'll keep an eye on that because we want to watch for that extreme. When it gets too bullish, that may be an opportunity to where the market may be topping out. We definitely are at the upper end of the range still. You can see, though, that's flattening out. We've had a really powerful momentum move here. And in this last rally, we just turned on a dime and didn't look back on this indicator here. So now we're looking at this halfway point, 50% location, back up above that. And the buy-sell ratio is also really showing some strength here. It was, quite extended. I think there was a little bit of fear. We had some selling and some news items that may not have been overly bullish, but now the market is pretty content with what information is being priced in currently. There's some more data. There's always data. There's always things that are going to be happening. That's why I prefer to just focus on the price activity. The data is going to be priced into the stock, whether or not it's a good or bad or ugly. The market is anticipating already. So nice pop here. This upper range, it looked like we really wanted to go back down, especially after this nasty bearish engulfing bar. It moved lower. It looked like it wanted to retest that 429, but just rallied hard the other day, and we're back up above those levels. So now this area should become a support area. You can see we're still kind of in that range and may be approaching that upper level on the market. That would shift the bias. Again, that's why we're shifting our bias back to mildly bullish in this bull market, and essentially dip buying right here over the last couple of days. We'll be watching for some momentum now moving forward. We're also seeing some strength in the indices where this was down to 3 or 4. We're back up to 7 buys on the Dow, and buy-sell ratio on NASDAQ 100 is actually starting to climb. You see we got 27 over 13. Making it a 2-to-1. There's some stuck in that hold range right there, but we're seeing some stability, some strength in proof in the data here that we could see upside, potentially significant upside. We may see a really exuberant move here, especially if we get the bonds to rally and the market starts to feel a little bit more comfortable about what the Fed and interest rate and inflation and all of those things that have been an issue now for 18 months may start to come back into consideration. Construction, aerospace, industrial leading currently. Our sector ETF scan, if we take a look at that, we're seeing a couple more tick back up into the uptrend. So all of these are now out of that sell range, that downtrend. They've adjusted back up into this pause hold condition and looking for new buys now on energy. Let's take a look at. Oops, I think I accidentally hit the wrong button. It did. Energy here. Seeing some strength. We'll see if we get, crude oil could potentially be becoming an issue as we're still dealing with inflation and pricing moves higher. But nonetheless, the energy ETF IYE is now has a new uptrend and is in that upper momentum location on the stock chart, which is a positive thing. That's ultimately the range. That's ultimately the setup that we want to see on markets and on stocks. And we're seeing that healthcare, telecommunications had a real big day the other day also, and maybe breaking out of that area also. Let's take a look at, I wanted to look at the market ETFs and the bonds here, the TLT because the TLT has had a pretty big move off of its bottom, and it's going to start to get into this location that we want. Ideally we want bonds to start to go back up again, because the interest it's going to let us know that interest rates are dropping. So as we keep an eye on this chart, now that it's in this bearish momentum zone, it works the opposite way to the downside when we're in this downward sloping trend and we're counter trending back up. Now all of these areas where the market has been before are going to create overhead resistance. Okay, so we're at that first level. We'll see if we retrace lower or if we gain some strength. If we gain some strength here in bonds, then that should definitely add fuel to a continuation of the stock market rally. Interesting location that we're seeing that right here. Muscle ETFs, if you take a look at some of the new buys in here, Ultra Semiconductors 2X ETF. Remember that when we're looking at the ETFs, there's going to be lots of different things in here, but they're all bullish. They're all moving to the upside. That also can mean that we have bearish funds that are in here, a negative for when things are dropping. But we're seeing two different things we'll take a look at. One, semiconductors, USD. So if you don't want to focus on one particular stock, like Micron or Intel or AMD or Applied Material or Nvidia, or you name the semiconductor, you can own the entire group of that sector with an ETF. And in this case, it's a 2X ETF, which means that if the semiconductor sector goes up by 1%, this will go up by 2%. So it's a leveraged ETF. Okay, and they work both directions. There are inverse ETFs, which we've talked about on this channel before, and those can also be effective for being long an asset as something else is dropping, so that you don't have to be short, you don't have to deal with margin, you don't have to deal with put options, but you can still add a little bit of hedging as well in portfolio management by owning some of these ETFs. So we'll keep an eye on some of those each day as we look through. The other one that was interesting was silver right here, Ultra Silver AGQ. So we're seeing a bounce in silver. That also may be, we may watch for gold to have a move here as well, and not a big deal, but certainly interesting. When we're talking about metals, oftentimes that's kind of a flight to quality. So if you see money moving into gold or money moving into silver, especially if the market is dropping, that could be money flowing to what it considers to be a more secure asset location. Let's take a look at some of the new buys here. I'm just going to refresh our list. And AAOI, this has been the high flyer of the year. It just keeps working as well. So another new buy signal on it, up 8%. It's in that semiconductor realm also, and has gone from $2.50 with only one trend retracement that really didn't even trigger a sell signal. And now it's kind of chopping, consolidating, but it's doing that inside of the momentum zone still. So now you're seeing active buying taking place right at this level. And that's what we want to see on a momentum stock like this is, yes, it's gone up a lot, but it could also go up a lot more inside of that momentum zone. So these are high risk, high reward type stocks. They can move, 10, 15, 20% a day to the upside and to the downside, just so be aware of that amount of volatility on some of these stocks. But it's a new buy. It's gone from hold back to a buy. ACLS, also a nice little pattern where it's gap back up inside of the buy zone. So we're here, our momentum zone, and we're up in this location. So we're still connected to this high and this low. Pardon me. And we now are back up above this location. We've entered back up into that trending zone, and we have a new buy indication on that stock, which is that's really what we want. Is ideally we want to see a stock that's gone from the sell back to the hold back to the buy. When we're dealing with our back test and we're back testing a stock, that is the actual signal that it's following. So it's going to go here. It's going to take a sell and the hold, and then the first buy after a sell. So the first buy after a sell. So any tracking on a stock that you're doing on a back test is going to pull that data in. For example, if I pull that in just for this time frame, you can see it had the two signals, it had the one, and then as of today, it had the sell, but as of today, it's going to notch back in a new signal on that stock. QTRX, let's look at this one also a really nice looking pattern. When I say really nice looking pattern, what I'm looking for is I'm looking for this stock that's been trending like this at about that 45-degree angle, moving up nicely, not moving up like this. We saw on AAOI when it does that, it pulls back. Ultimately, it can hints higher, but if we get a stock chart that's nice and smooth and it's entering back up into that upper momentum zone, that is a nice looking pattern that we want to watch for. Good solid confirmation bar, 4% on that day yesterday, and not extreme, but working towards that direction, and that is the momentum trend profile that we want to be able to take a look at. QTRX, let's look at a couple other. STRL, this has been a nice one over the year as well, and the upper end of that range has just gone from hold to a buy, and then OII, and more oil stocks. Keep an eye on those oil stocks. Build out the watch list, add some stocks into those there. I think that overall trend in oil is still going to maintain because the oil chart is looking like it's got quite a long-term bullish perspective on it. That'll do it for today's update. Everyone have a fantastic day today.